Hello everyone, welcome to the channel. In today's video, we're going to talk about Michael Burry and how to invest in 2023. To start with, I want to talk about who is Michael Burry. Michael James Burry is an American investor, hedge fund manager, and a physician. He founded the hedge fund Scion Capital, which he ran from 2000 until 2008, before closing it to focusing on his personal investments. But why are we talking about Michael Burry specifically in this video? What does he resemble? Michael Burry correctly guessed the 2008 mortgage crisis and shorted the stock market and the mortgage bonds and made a lot of money in the process. And this was not the only crisis that Michael Burry took a bearish position to. He also shorted other big recessionary times and other economical times that led to disaster. That's why he's a respected name in the stock market world. Michael Burry is not a very extroverted guy. He likes to be in the dark. He doesn't like to reflect his own opinions by being on the mainstream media, such as CNBC or Fox News. He's like the Batman of Wall Street. However, we still know some information about Michael Burry's thought process going into 2023 due to his Twitter. Michael Burry does not have a Twitter account under his name. His profile is named Cassandra and he likes to share his own opinions about the global economy and the stock market. According to Michael Burry, the US stock market is extremely overvalued right now. He sees a lot of overvalued and overinflated tech companies. To be more exact, he even stated that he sees more speculation than the 1920s and more overvaluation than the 1990s. If you're relatively new to investing, you don't maybe know what these years resemble. To evaluate, in the 1920s, in 1929 to be exact, there was the Great Depression. It's considered to be one of the greatest financial collapses in modern economic history. And in 1999, there was the dot-com bubble that led to tech companies plummeting and Nasdaq suffering significantly due to the overvaluations that were created between the years 1993 to 1999. Moreover, he stated that there is more geopolitical conflicts due to Ukraine and Russia situation. It should be stated that this conflict between Russia and Ukraine caused natural gas and oil prices to increase significantly. And this increased the inflation data that we originally had due to the money printing that was made in 2020 COVID crash. With this conflict, the inflationary pressure just got worse, and Michael Burry is aware of this and believes that this is going to be one of the biggest problems going forward. In simpler words, in another post that he made from the Cassandra Twitter page, he stated that people always ask me what is going on in the markets. It is simple, the greatest speculative bubble of all time. Besides individual stocks, Michael Burry believes that ETFs are also overinflated. In an email interview that he conducted in 2020, he stated that ETFs are also overinflated and nobody's safe. This is important because ETFs are mainly observed as the safety net of the stock market, and if you don't want to be very risk open, you need to invest in ETFs. But when the stock market is overvalued as a whole, ETFs are also automatically overvalued. And Michael Burry focused on this point throughout his hypothesis. He also believes that there is no fundamental basis of the American society to buying stocks after a while. And he states that this is how stock market bubbles are created. People just buy due to the hype, and there is no fundamental valuation, and there are no intrinsic valuation of any companies that are highly demanded by the society. It should also be stated that Burry is not all bearish. He believes that there are some international opportunities that could be capitalized on, such as Japanese small cap companies due to their low earnings multiples or low free cash flow multiples. Also, he's highly invested on water as a commodity because he believes that there will be a water shortage going forward in the world. But if you're following this channel and watching this video, you're probably primarily invested in the US market and the US economy, and he believes that the US stock market and the economy is highly overvalued. Finding better investment opportunities in international market is not an argument that is only supported by Michael Burry. Investors such as Ray Dalio and Charlie Munger also supported the idea of finding better valued companies in international markets. This way of thinking is probably caused due to the overinflated markets that the US is in. It should be stated that these investors invested all of their lives mainly in American companies, and they changing their sentiments about America and the economy tells a bigger story that should be observed carefully. Besides overvaluation, we have another big problem that affects the stock market and the economy in a very negative way, and that is inflation. When we observe Burry's view about inflation, everything becomes more scary because Burry believes that inflation is going to be one of the leading factors that will cause the next financial crisis in America. It should also be stated that Michael Burry was correct about the inflationary pressure that we're observing right now because he called that there will be inflation in last February. According to one of his tweets, he stated that prepare for inflation, reopening, and stimulus on the way. Pre-COVID, it took $3 of debt to create $1 of GDP, and it is worse now. In an inflationary crisis, governments will move to squash competitors in currency arena. With this tweet, he also gave his opinion about the foreign currency exchange and how it is going to be affected through inflationary times. In simpler words, he stated that money printing is not the solution and there was a lot of money printed in COVID. And with the reopening that we are observing right now, we're going to see the effects of inflation at its peak. When we look at economic conditions today, we observe that there is around a 7% inflation number. We observe that this decreased over the last 2 months, but when we look at the US general numbers about inflation, we know that US inflation is around 2 to 2.5%. And when Burry guessed inflation to peak, the US inflation rate was 1.7%. This shows the capability in Michael Burry's economical analysis. It should also be stated that due to his analysis on inflation, he shorted 20-year Treasury bonds. To explain this in simpler words, when the inflation rate increases, the federal government increases interest rates to fight the inflation. When interest rates are increased, bond prices tend to decrease, and due to this ideology, Michael Burry shorted the 20-year Treasury bonds. Besides general economical perspective that Michael Burry brings to the table, I want to also share his opinions about cryptocurrencies. According to one of his tweets, he stated that Bitcoin is a speculative bubble that poses more risk than opportunity. Despite most of the proponents being correct in their arguments for why it is relevant at this point in history, if you do not know how much leverage is involved in the run-up, you may not know enough to own it. By these words, we can understand that Michael Burry is not a big fan of Bitcoin and generally cryptocurrencies due to high leveraged environment that they're being traded in. This is an important factor because we know that over leverage can cause and caused a lot of financial crises. To bring my own opinion to the situation, I also believe that cryptocurrencies are speculative. There could be significant opportunities in coins such as Bitcoin and Ethereum, but they are not also 100% trustable. It should be stated that these cryptocurrencies do not provide any service or product at the end of the day. The value that they have are just caused by unreasonable demand. I specifically use the word unreasonable because there is a reason to demand increase for a commodity or a stock. When demand increases, there's probably a fundamental change in the company that brings more profits and revenue to the investor. But this is not the case in cryptocurrencies. Cryptocurrencies do not provide any significant revenue or free cash flow or profits at the end of the day. They're just tools that people use to trade currencies, but this could change over time with companies such as Tesla integrating Bitcoin to their sale process, and we will observe this over time. But being over leveraged, as Michael Burry stated, is risky, and it is one of the main reasons that leads to financial crises.